Hello traders, it's Forex Evangelist right here from Bullish Trend Forex Academy, and welcome to our weekly Forex forecasts. So, which is guys is Forex Evangelist right here, and welcome to this week Forex forecast from Bullish Trend Forex Academy. So, in today's video, we are going to be covering a lot from the economic calendar, economic data, the impact it has on structures and on the market. We are going to be looking at some pairs, all right, that probably we think is going to move to a certain direction based on a higher probability chance. We're also going to be looking at geopolitics because we have a lot of uh, elections happening this week from uh, French parliamentary elections, which already is happening currently, the UK Prime Minister election, which is expected to commence from the 4th of July, and some other political tensions happening, especially in the Middle East. All right. So, without further ado, let's start. All right. So we're already on the economic calendar, and if we look at what we can see here, right, we're only going to be focusing on what we think the market is going to be focusing on. All right, what we think, investors are going to be paying attention to. So here we have on Sunday, which is today, which election is already going on. Uh, the European Parliament election, which the far right is already leading, and I think we think in British Forex Academy that probably could have a negative impact on the euro. All right, why? Because probably it could affect a lot of policies for Emmanuel Macron. All right, because the large number of the MPs on the parliament is going to be from the far right, all right, which could have an impact, all right. Let's not say completely, but could have an impact in his re-election, right? So that is why we think the market we see that as negative for the euro, and a lot of deflationary pressures coming from the economic data this week on the euro, pointing down on weakness for the euro. All right. So let's probably look at those economic data and a rundown of it from Sunday to Friday and see what those economic data are. What is expectations on those economic data? Because as traders, you need to understand that markets act based on expectations. All right, we can see some surprises in those economic data. Maybe where we are anticipating, a reduced number in a particular economic data, but it increases, or an increased number, but it decreases. Market can give us, surprises, but market will always move and react based on expectations. All right. So let's continue. So Monday we have uh Canada holiday. So for the week, is almost like a dry week in Canada. A holiday week in Canada. When I say dry week in Canada, I mean based on the financial market. But on Friday we have an important data coming from Canada, which we are going to come to that, which is the unemployment rate from Canada. So on Monday as well, we have retail sales from AUD, which these are from the forecast on trading economics expected to increase from 0.1 to 0.2. But we have not seen any expectation from investing.com. That is the website I'm using for my economic calendar, right? Which, from what we are seeing on trading economics, 0.2, 0.1 are expected to be 0.2. That is inflationary for the Australian dollar, right? And the expectations we have from the Reserve Bank of Australia, to high rates, and the bond yields have been appreciating a lot, which is a good measure of market sentiment as well. Okay, and even the VIX, which is a gauge index, has also been going down for the past 1 week or two. So I think there's a lot of trend coming into the AUD. There are reasons to, buy the AUD. The COT report is also indicating that big banks are putting their money in the Australian economy. So that is good for the Australian dollar and the Australian dollar denominated assets, right? Be it stocks index and the rest of it. So on Monday, we have a European Central Bank non-monetary policy meeting. May not be so strong to affect the euro, but we have to pay attention to that. the parliamentary election from France is one to pay huge attention to. I think the market is going to focus so much on that, which Le Pen is already leading. We could see some big drop as the market opens at the time of recording this video. When the market opens, we may see some sort of drop in the euro, all right, because that is, I sense it to be negative for the euro. So sorry for that. And the HEOB manufacturing PMI from Spain, from Italy, from France, from Germany, and the Eurozone in general is expected to drop. All right. And this is deflationary for the euro. All right. This is deflationary for the euro. There is no confidence, all right, from the manufacturers. And this is also transmitted to the consumers. All right. There is no positive impacts. All right, people are not spending much, and this is affecting the manufacturers, and the economy is not expanding. And what is the ECB going to do? Already they have started cutting rates, and we expect them to at least cut it like 3 times or 4 before the end of the year. All right. So this is deflationary for the euro, meaning a lot of money is going to move out from the European economy, what we call carry trade, and into investors will put their money where they will get more yields or interest on their investments. So this is deflationary for the euro, and this is one more reason I feel and I think uh, a lot of weakness is coming into the euro and euro denominated assets. All right. So on uh, on Monday as well, we have an important data coming from Germany, which is the German CPI. All right. The German CPI also expected to be deflationary. All right. This is not good for the euro at all. So let's go to um let's go to trading economics to look at uh let's go to economics and to look at the core consumer prices, core inflation rate. So everything is anticipated to drop. All right, is anticipated to drop. So, and that is deflationary for the euro. All right, it's just anticipated to drop from 2.4 to 2.3. All right, so this is deflationary. This is not good at all for for Germany, and which is, we know, the biggest economy in Europe. So whatever happens there, you can see inflation rate 2.4 the last time. Okay, and anticipated to be 2.3. That is what trading economics is forecasted it to be 2.3, which is deflationary for for uh uh for the euro. All right, inflation coming down is good, but uh, there is no economic expansion. So I we anticipate the ECB to be cutting rate as well, okay, to bring down probably inflation back to 2% in Germany. But on the overall for the eurozone, we see inflation coming down close to target. All right, and they are cutting rates because it's hurting the economy so much. So let's continue with the economic calendar. Uh, we have ISM manufacturing PMI, and more importantly, ISM non-manufacturing PMI in the United, coming for the United States dollar this week, and we are going to come to that. So for ISM manufacturing non-PMI 49.2, we anticipated inflationary pressures to come into the dollar. Okay, that is the expectation. But we could see surprises, all right, because the core PCE last week, which is personal consumption expenditure, all right, which is the major measure of inflation for the Federal Reserve, was bearish. All right, it came down, it was deflationary, for the United States dollar. And we saw such weakness coming. If I go to a chart like a dollar card, for example, um, a dollar card, let me go to dollar card. So we saw that probably, affecting the dollar, right? You can see affecting the dollar, but we could see some trends coming into the USD. We explained that based on the uncertainties, hovering around this week, based on the elections. Okay, there could be run for flight to safety. So we'll see how that will unfold. Right. So this is sounding inflationary for the dollar, but the manufacturing ISM index or PMI is what I think investors are going to be putting more attention and focus to. All right. So on Monday as well, we anticipate and expect ECB President Lagarde to speak. So we are going to be probably focusing on what she's going to tell the general public, and I encourage you to go to their website when she's speaking. Try to understand the tone of her of her speech. Is she going to be dovish or hawkish? Probably dovish based on what economic indicators are saying. Um, so on Tuesday, Reserve Bank of Australia meeting minutes as well. Pay attention to that. Spanish unemployment change. Pay attention to that as well. Maybe not so strong. Okay, but pay attention to that. Um. Uh. So. So EU Euro core CPI, very important and one to pay attention to. All right. So inflation is easing down. We are seeing that it's easing down. Okay, it's easing down. It's coming closer and closer and closer to target. But the ECB is cutting rates. The ECB is cutting rates. Okay, and this is not good for the for investors, because investors are probably going to go to where they are going to be seeing high yields. All right, inflation is expected to come down 2.9 for year on year to 2.8, and for June from 2.6 to 2.5, which is good. Okay, inflation is going back to target. All right, but they are cutting rates, so that is why we are seeing strength going out of the eurozone. All right, and based on the parliamentary elections this week from France, I've already said talked about that. We are expecting some sort of bearishness coming into the euro. All right. Um, Unemployment rate remains unchanged. Okay, that is not close to the targets. All right, at least close to 4% is good for an economy. So I think it's still far from target. In as much as uh, 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 textbooks can tell you 4 to 6% is okay, but I think 6% is way high for unemployment. At least close to 4% is okay, is good. So I think bearishness for the euro. That is my sentiment for the euro. Bearishness for the euro. So Lagarde is also going to be speaking on Tuesday as well. Pay attention to that. So job openings, which is deflationary for the dollar. All right. Uh, but then the gap there here is not so much, but it's deflationary for the dollar. So pay attention to that. So AUD building approvals, inflationary 1.8 to minus 0.3%. You can see why we're anticipating strength coming into the AUD, and why we're anticipating the Reserve Bank of Australia to increase their rates, which is going to make money flow back or flow into the Australian economy. The economy is doing well. Okay. Inflation, these are inflationary pressures. They are adding to pressure the inflation to go up. And what is the Reserve Bank of Australia going to do? They are going to hike rates to calm down the economy, and investors are going to bring money into the economy, and this is further going to make the AUD strong. So yeah, we are still going to go to the chart, and that is why you can see AUD going to the upside. For example, if I bring a chart on AUD New Zealand, so you can see that because of the expectations, you can see AUD New Zealand probably going to the upside, right? You can see that happening, probably going to the upside. All right. This is because of market expectations. Remember, I always say markets react based on expectations. All right. This is how the market works, based on expectations. So we go back to the economic calendar. Building approvals, that what we just communicated now, inflationary for the AUD, that means strength for the AUD, all right? For HCOB, services PMI from Spain, from Italy, from France, from Germany, and the Eurozone is expected to be deflationary. More weakness coming into the Euro, at least based on expectations, all right? And markets will always react based on these expectations. More and more weakness coming into the Euro. So Euro bullishness, I'm not in for it now, because the data is still pointing towards being bearish, all right? Unless we see surprises in the market, and then we know how to better manage our portfolio. But for now, euro bearishness, right? And even the COT report, based on sentiment from COT report, is still indicating a lot of contracts going out of the euro, okay, and flowing into other economies like the Australian economy, right? Or the Australian dollar rather, because we are currency traders, we are talking about currencies right here. So uh for Poland, interest rate decision is expected to remain unchanged. Interest rate is high here, okay, but on structure we are going to be saying what we anticipate uh for Polish zloty. All right, it's expected to be high here. Okay, we are also going to be having a look at. So later, maybe I will make a short video and share about some economic indicator data from Polish economy, and we'll see if everything is pointing towards uh, uh, inflationary or deflationary. Right, but interest rates are high here. All right. So one website you can use to do that, which already you can see on my screen here, is Trading Economics. Right. So let's go back and focus on major economy. That's what we are focusing on right here. In as much as dollar PLN is on my watch list, but I want to focus on the major economies right here. Because if I talk about this, we are not going to be be done. The video is going to be so long, right? So for USD, we have initial jobless claims, right? This is bad for the dollar. All right. It means a lot of people are claiming to be jobless. Okay, they are claiming for government benefits. All right, so this is not good. More people are not employed. Okay, previous was 233K and it's expected to be 235K. Okay, this is bad. All right, this is bad. This is deflationary. All right, so more problems for the United States dollar. Like I said, data is showing weakness for the United States dollar, but the only thing that's going to make dollar strong this week uh, 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 is based on uh, maybe the uncertainties around the financial markets, right? And if you go to the CME Fed Watch 2, right, it's pricing in 64% rate cuts for September. Their next rate cut after July. Okay, July is 10% rate cut, right? But for September, we are getting 64% possibility chance of a rate cut, which is bearishness for the dollar. So remember what I said. I always say that the market will move and react based on expectations. That is how the financial market works. So I'm going to be careful, trading the dollar, especially against stronger currencies, right? So the ISM non-manufacturing PMI, which is an important data the market is going to be paying, or the market is going to be paying huge attention to. Investors around the world is going to be paying huge attention to ISM non-manufacturing PMI to be deflationary from 53.8 to 53.5. Bad for the dollar. All right. So uh, on Wednesday as well, Lagarde, this is the third time we are seeing on the economic calendar that Lagarde is speaking. So you need to pay attention to that to tell you that is problem. So anytime you see like 3-4 times in the week, a central bank governor is speaking, that is not, for me personally, I don't think that is nice, especially when we see economic data are showing bearishness for the economy. All right. So or when there is problem, it could be inflationary is a problem. Inflation is too high, is so much is a problem. So when it's too low, too high, when you see them coming, it means there's a problem. They are talking a lot, and especially they are talking based on economy, monetary policy. Tells you there's a problem. You need to pay attention to their speech. So crude oil inventories from last week this week is showing it's been negative for the oil, right? But I think the tension happening in the Middle East is, I think that's what is keeping the oil to go to the upside. And based on OPEC supply cuts and the rest of it, I think this is what is making oil to go to the upside. I think crude oil inventory, the market is not focusing much on it. All right, okay, because crude oil inventories, if they are higher, it means there is a stockpile of unrefined oil in tanks and reserves. Governments, oil companies, and oil agencies, right? So, but I think for oil market, which we are going to come into, I think uh the OPEC policies and the geopolitical tension happening in the Middle East is a huge part that is making oil prices to go up. So for me personally, I'm bullish. I think that is where the market is focused on. That is where the sentiment is, and that's what is driving the oil price. All right. So I'm bullish for oil, but we are going to come to that. So on Thursday we have uh, uh, ECB Mahmoud is going to be speaking. Pay attention to that. All right. Uh, CPI for Swiss National Bank is expected to drop. We would pay attention to that. That is the expectations, right? And the most important one is the UK general election, the prime minister election, right? I think Rishi Sunak could probably have an edge, but slight edge, all right. A lot of scandal from his conservative party, of 5 members, betting issues, but at least he has an edge, all right. In as much as if immigration is at its height, at its peak, which is the major concern for British voters, right? But a lot of measures have been put in place to put it to the downside. Like the saying goes, the angel is better. The devil is better than the angel you do not know. I know customer is saying a lot of things. How is going to solve that? But there are some key points that we need to focus on. Uh, uh, in the manifesto and what Rishi Sunak is saying. Tax rate cuts, all right? So I think this is good for the British citizen. Everybody wants to see their tax being cut, right? So even if in their last debate, Kastema is denying the fact that he's saying there's going to be an increase in tax, all right? He denied it on the last debate, but he has been caught on camera saying things that probably there's going to be uh, uh, a hike in tax, all right, because where the Labour Party is in charge, like Birmingham, we can see 20% increase than other parts of the United Kingdom in terms of council tax. So I think Rishi Sunak, no matter what happens, no matter what this the gossips around, I think Rishi Sunak has an edge, and with what the BOE has achieved, putting inflation back to 2%. I think that is good for Rishi Sunak. He may have an edge. So, and that means we could see some strength coming into the British pounds. That's what I feel based on the UK general elections, all right? But the polls, before the election result comes out, this is when the election result comes out. But I think the polls is going to be driving the British pound. Who is going to be leading in the race is going to play along in the market. But I feel Rishi Sunak will have that edge. Technically, he's showing me he's going to pound for some pairs, he's going to push it upside. But I think that is the fundamentals, that is that investors and traders are going to be focusing on based on the pounds in the UK general elections. So on Friday, we just focus on the major news coming out from the dollar, which is the non-farm payrolls, which is deflationary for the dollar. Deflationary for the dollar. Okay, non-farm payrolls from 272,000 to 189,000. A huge drop is expected to come out for the non-farm payrolls, right? Unless we see, surprises, right? But remember, like I said, the market acts based on expectations. Okay, market act based on expectation. So I think that is not good. And unemployment rate is expected to remain unchanged in as much as it's around the target zone, right, for unemployment. But that's for non-farm payroll, that's not good. All right. So that is it. And for Canada, unemployment rates 6.2, 6.3. Don't That is bad and going up, and that is bad for the Canada. And also we can see with the Bank of Canada had the rate cut the last time, and that is not good uh, for the Canadian currency. So that is the reason we are seeing this happening. In as much as oil is going up, I don't think oil is going to be driving much, of the Canadian dollar, right? So you can see some people tell you the relationship between that. That is for fact that is the truth. The oil has, a positive, a direct relationship with the Canadian dollar, right? But you need to have in mind some sentiments, that are around the Canadian dollar, right? So it's not always going to, because oil is going up, then Canadian dollar is going to go up. No, that doesn't happen. always, right? So that is it for uh the economic calendar. So we are going to be looking at some geopolitical events and how it's going to affect the market. Already, we have said about the French parliamentary elections, which the market is paying huge attention to. Biden and Trump debate the last time. That was not. I think it's too early to say, but based on what we are saying, it's as if Trump has an edge over him because of a poor debate, he had with Trump, and a lot of Democrats are calling for him to step down. I think that is Democrats shooting themselves at the leg, and that is not good for Biden. So, but the election is still far. There is still a lot of time, and we know how the U.S. elections happens. At the end of the day, the main upset is going to come from votes from the electoral college. So I think that is still far. We'll see how that unfolds and how that happens. So I don't think the debate has more in as as it showed a little slight of weakness for the dollar. All right. The market focused so much on it because this was the highest watched debate, presidential debate in the history of America. And this one came so earlier, right? So there was a lot of attention on it. So the market paid huge attention on the presidential debates, right? So we can see news coming in that French far right holds strong lead ahead of votes, right? This is not good for Emmanuel Macron because it's going to affect a lot of his policies. We know that Emmanuel Macron is somebody who works hard, for any positive change, anything that's going to impact the eurozone, which obviously is going to have positive impact on the euro. Okay, and if there's a lot of MPs from the far right inside the parliament, it's going to affect a lot of his policies, right? And probably could have an effect on the election. So that is why we think if a lot of MPs are in the French parliament, right? This is why we are sensing the weakness coming into the euro, and we are going to see that based on structures, right? With some currencies that we have, like the euro AUD, which we are going to show you. We are already saying that we are seeing strength coming into the AUD, and we already data is already happening, but we still expect that to happen. So we also show you that on the charts. So that is it for French elections. We have said about the British elections. So now nothing much. For now, Reuters, this is Bloomberg. Reuters still reporting the same thing. Okay. Uh, then we go to the Middle East, right? There has been a lot of tension, okay, on the northern border of Israel between Lebanon, Hezbollah, and the IDF soldiers have been exchanging fire, right? Drone attacks, missile attacks, gun battles has been happening, and the IDF soldier is already ready because Benjamin Netanyahu, the Prime Minister of Israel, had a meeting with some of with his war cabinet, and most soldiers have been deployed, to that area in case of any outbreak. It's just at the brim, it's just a tiny rope holding the war from not happening. All right. So because there has been exchange of fire from the border. So the only difference, we cannot call that an all-out war because there has not been an invasion. Okay, so that is it. So you need to keep an eye on that, and that tension is what is making the oil price to drive up more. No matter the supply cut last time from the OPEC meeting, but the tension happening uh, in the Middle East is what is probably, I think, driving oil prices up. And we can see that I think the corrective structure came out from last week. Why the corrective structure came into oil, which is not strong enough to make oil price drop. We are going to show you that because of the crude oil inventories data that was bad for the oil, but that is not enough. That is not what the market, I think, is focusing on, right? So market is focusing more on geopolitical events rather than economic data in terms of the oil. That's why I think the oil price is going up, and I'm bullish for the oil. So that is it. We're also going to talk about cryptocurrency Solana, where if you follow the news very well, you will see that Solana ETF, some big venture capitals in the crypto space like 21 shares is filing for Solana ETF, and we can see that coming out in the structure. And for Solana, the structure is telling us that price is probably going to go to the upside. I think we see that on the chart. 160, 170 should be a target. But I think 190 and above 210, I don't think that is promised. That is too much to ask for from the market, but it's still a possibility. I see price going above that level, but we need to focus on 160, 170 on the short term. So we are going to see that on the chart. So now we are done with the economic calendar and geopolitics. Now we focus on the chart and overlay what we have just said now on the chart. So that is the most important thing, because a lot of traders, their problem is not understanding fundamentals and how to overlay it technically on the chart. That is their problem, right? So we go with the USD card. The both economies is not so good. We are seeing very, downward pressure coming on the dollar. A lot of economic data coming is showing pressure, downward pressure on the dollar, right? And Canada as well, downward pressure coming on Canada. Already, we are seeing a rate cuts on Canadian dollar, and the data we're anticipating to come out from the Canadian economy is not good, okay? And for USD, the economic data showing deflationary pressures, and the Fed is expected to have almost 70% possibility of having a rate cut, the first rate cut, okay, having a rate cut, okay, in September. So, but I think dollar card is still positioned to the upside to have a slight edge on Canadian dollar. The United States dollar is expected to have a slight edge on Canadian dollar, right? But you could focus on other pairs where there is a clear fundamental divergence, right? But technically here, we can see price has given us a three-wave structure here. Here, what I can see here, is a corrective structure. So any further push it down, so we could see price going up, at least breaking this high, right? At least heading to 1.38. Okay, that is why I see price heading for dollar card, at least 1.38. So if you're looking for a setup, you need to look for buy setup, right? So that is for dollar card. So the next on our watch list is pound card. We have already said that based on the UK Prime Minister election, right? Okay, the pound has been some sort of strong for some time now. So what are we anticipating? Okay, if we get that positive outcome in the election, which is Sunak winning, we could see price pushing to the upside. I'm not going to go for this upside. I'm going to wait for a corrective structure, something similar to what has happened here, and then this will be my trade, right? For pound card. That is my game plan, all right? And that's what I'm going to wait for, because the market, I think, is going to focus more on that prime minister election than economic data, right? So that is it. But everything happening here is a collective structure, and we'll see how the market and other data is going to react to see what's going to happen next on pound card. But for now, focus on this up move, right? Uh, so the next on our watch list is Euro AUD. We have already said the strength coming into the AUD, right? We're anticipating rate hikes in AUD, and that is strength, okay, for the Australian dollar. Because when there is a rate hike, meaning high interest, if Mr. A is offering a 2% interest rate and Mr. B is offering a 5% interest rate, who will you want to go for? Is Mr. B, who is offering a 5% interest, or is expected to increase rate? So that is why we can see that happen. ECB is cutting, AUD is expected to hike. So that is why we are seeing this downward pressure on Euro, and Euro AUD pushing to the downside. So technically, what are we anticipating in the market this week? I think this already happened, which is a collective structure to the downside. Okay, in as much as AUD is showing us technically that there could be a push in the upside later on, anytime, no matter how price moves, there's going to be a push in the upside. But for now, we are going to be focusing on uh, how price is going to probably react, because this could just be a corrective structure right here, and then just a corrective structure maybe is what is probably going to happen. We may not see price, heading big to the upside, all right, because of fundamentals, because we know fundamentals are the key drivers of the financial market, and the financial market moves based on expectation, okay? A lot of people will tell me a lot about seasonality, but it's based on fundamental expectations, right? So what I'm looking at for on Euro AUD is on the 1 hour time frame. If I can see a three-wave structure, I'm going to be looking for sell setups on on the AUD, because if you go to the bond yields, which is a a good measure of currency strength, we can use that. You always use that. Every successful trader out there always look at the bond yields. If you look at the bond yields and look at the AUD 10-year bond yield, so you can see price has been pushing probably to the upside. That is why I think there could be a pulse on Euro AUD. But for now, some strength is expected to come into the AUD pair, because you can see wave one, wave two, probably this is a third wave. Price, at least, maybe even if we get a corrective structure here, 1 month, no, or if price wants to push to the upside, all I know is price is expected to continue pushing into the upside, taking away this high, and probably it could take away this high. So I think more strength is coming into the AUD, and that is why I anticipate Euro AUD to push to the downside. All right. And inflationary pressure coming into economic data, we have already seen on the economic calendar. That is why I think Euro AUD is expected to push to the downside, right? USD PLN, we're anticipating price to push to the upside, right? Okay, here we've gotten the first impulse of the next structure. Here, a corrective structure. Price could either move from current levels or maybe give us more pullback like this, and then we can see a push it upside. So for USD Polish zloty, look for buy setups, right? That is what I'm going to be focusing on for USD PLN, right? So we go on to the next currency pair, which is USD SEK. So for USD SEK, I anticipate price, to push the downside, giving me a complete corrective structure like this, and then we can head to the upside, because already we have got to the first impulse of the next structure. Market has given us a change of character here. All right. So this could be, a push to the upside, maybe potentially corrective structure, and then we head to the downside. But for now, we can focus on this up move. All right. So that is for USD SEK. So for USD MXN, what you can focus on here is probably a corrective structure like this. Let price give us a three-wave structure here, then we can head to the upside, taking away this high probably, right? And then around the 18.8 level, then we watch for the market reaction around that level. But for now, wait for this corrective structure, then this is our trade. All right. So that is for USD MXN. The next one is on our watch list is New Zealand Swiss franc. All right. So Swiss franc has been weak. Already we are seeing the rate cut from the Swiss National Bank. A lot of deflationary pressures coming into economic data from the Swiss economy. And before we look at NZD Swiss, if we go to bond yields again, we can see weakness has been coming into uh, the Switzerland 10-year bond yield, right? You can see. You can see price has been pushing to the downside from the 11th of June this month. Price has been heavily pushing to the downside. So I think this could be done anytime soon. Maybe this is a 5-wave structure that is going to be expected to be completed. But for now, I'm still bearish, a little bit bearish for now on the Swiss franc, unless we see some economic data coming to react or affect the markets, right? So that is it. But interest rates are higher than in New Zealand than in Swiss. So I think for the long term, New Zealand Swiss is heading to the upside. But this week, like we are focusing on, I'm anticipating a push to the upside for New Zealand Swiss. So structurally, what are we waiting for here? Oh, this is an impulse. So if this is the corrective structure in between, push it downside, probably taking away this low, we could act as a liquidity. Okay, this now could be the corrective structure in the form of an expanding flat coming to this level and a very good discount zone. Okay, there's a lot of volume here, so we can see price heading to the upside, probably taking away this high. All right, so that is what I'm going to be looking at, and we are bullish on Forex Academy is going to be focusing on for New Zealand Swiss. So the next on our watch list is Aussie card, right? We have said a lot about Aussie. No need to repeat ourselves. So structurally, what are we anticipating? So here already is the corrective structure here. So if price gives us a down move here, we may not see price taking away this low. Maybe taking away this low around this level. All right, we can see price pushing to the upside, right? That is what we are focusing on this week. Okay, but pushing to the downside again, that would not be much of a concern. But what we want to see is a push to the upside for Aussie card, right? Maybe move like this, right? For in between to give us a contracting flat, and then we can head to the upside for this up here. So that is what we want to focus on for Aussie card, right? So we go to the next pair on our watch list, which is Aussie Swiss. Nice one again to focus on. If we can look for price, probably this is the structure here. Okay, if we can get an expanding flat, potentially something like this, okay, around these levels, we can be looking for buy setups in Aussie Swiss. So for Aussie Swiss, I'm really looking for buy setups, right? So for gold, um, gold is a safe haven asset, and when a lot of downward pressure is on the dollar, investors would potentially look at other asset classes or currencies that are safe haven, like yen, Swiss, if the underlying economic sentiment around them are bullish, or they can look elsewhere like the commodity market in a scenario gold. So we can see gold is expected to be bullish. So here we have already gotten the first impulse of the next structure. So any corrective structure here, I'll be looking for buy setups on gold. That is my uh 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 that is my target, and that's what I want to aim for on gold. A push to the upside on gold. Okay. So we go over to the next pair, which is oil. I've already said that about oil. A lot of data coming from the crude oil inventories, but because of the geopolitical situation around oil, OPEC, the Middle East war, Israel, Gaza, Hamas, Hezbollah in Lebanon, Iran. I think this is what is driving oil prices to the upside. So structurally, if this is a down move up, a corrective structure here, up here, corrective structure here, all right. So this down, we can get a push to the downside, giving us somewhat like an expanding flat here, all right. So we can see price heading back to the upside. So for me, I'm steadily bullish on oil and nothing but bullish for oil, right? So then Solana, like we said, for Solana, we saw some big venture capitals, filing for Solana ETF, like 21 share. I've already filed for one other venture capital. I think on Thursday before, on the 28th or on 27th, before 21 shares filed for it, also filed for it, right? And we have seen some big and strong move, right, from Solana, right? And price has given us probably the first impulse of the next structure, which came in the form of a three-wave structure. So what we are looking at for here is probably if price can give us a three-wave structure like this, push to the downside here, give us a big corrective structure here. I think we'll go into the upside. Like I said, 160 to 170, yeah, it should be a target, all right? At least the market can give us before any other further reaction. But market heading to heading above 190 and probably above 210. That is a possibility, and that is where I think market could go. But I think that is for now too much to ask for the market. Let's focus on 160 to around 170. All right. So that is it for me to you guys. And this video is sponsored by Hantec Market, a reliable forex broker with over 30 years of industry experience. They have tight spread, fast deposit and fast withdrawal, lightning executions, and they have regulation in almost all continents in the world. So click the link below in the description to trade with the Hantec markets and take your trading to the next level. Also, if you're a professional trader, you can check up the Hantec trader, which which have flexible trading conditions, flexible rules, and take your trading to the next level. All right. So don't forget to like this video, share, and subscribe for other newbie traders who don't understand the financial market, or who don't know the next direction in the financial market. All right. So that is it for now. Don't forget to apply risk management, trade with caution, use stop loss, and never ever add to a losing position. So without further ado, see you next week, and bye for now.